when I look out my window.
Hello, traders. Gary Wagner with the Gold Forecast here. It is the 16th day of May, approximately 9:15 in Honolulu, Hawaii. It is Monday, and this is the daily report for gold. We currently have gold trading approximately at 1492.50. 1493 bid ask spread. We do have the market under a small amount of pressure, currently trading about $2.40 lower. It has come off of the lows that it hit in the evening session and yesterday's session, and it has traded nominally higher, a dollar and a half higher, to a couple of dollars lower in the most recent part of trading, meaning when New York opened. Now, we are looking first at our daily chart. And as we talked about yesterday, it is simply not reacting in the way that a normal ABC correction might act. Now, at any moment that could change. Please don't get me wrong. But what I'm noticing, and what we pointed out the other day, if we look at this is our large wave 3 up, typically when you have the market correct, you will get some sort of what's called an ABC correction. So you get an A, you get a B, you get a C, and then from the C you get a thrust or a bounce up. However, what I noticed is that the compression that we're seeing in terms of the range itself, if I blow this up, we'll have an easier way of seeing it, is starting, at least on a tentative basis, to appear to me to be what is known as a triangle correction. Now, on a triangle correction, unlike a straightforward ABC correction, rather than it being composed of A, B, and C, according to Elliott Wave, and I put the print up yesterday, I'll go ahead and put it back up today, but on a basic triangle correction, rather than having a standard ABC, as I pointed out, what you get with this type of correction is a little bit different, because what he believes is it is composed of 5 legs. And then on the 5th leg, on the conclusion of the 5th leg, you get what is simply called a thrust line. So as the market comes up, and we have the market coming up here, hitting that high, you get a series of legs. Legs 1, 2, 3, 4, and then you get a 5th leg. On the conclusion of that 5th leg, according to R.N. Elliott, you get what is called a thrust line. And so the thrust line would be similar to the beginning of the impulse phase itself. Now, is that what we're going to see? I don't really know, but I can tell you this. When we look at this market, just in terms of the straight angles and the way that it's been trading, what you can see is that you're getting really some classic scenarios in terms of what I look for in a triangle correction. Now, what am I talking about? Well, really what I'm talking about is we have our first high here, and then we have our first low here. We'll call these our benchmarks. Once we get our benchmarks, the way to really determine if in fact what we're looking at is a triangle correction as opposed to an ABC correction is that as the market trades, you get a series of lower highs and higher lows. Then the market trades up and you get a lower high and a higher low. And then as the market trades, you get a lower high and a higher low. So as you can see, it seems as though it's following in suit with that. In other words, you are getting a very classic pennant formation. This pennant formation is a Western term, but in terms of the triangle itself, they are the same. The only difference is where that pattern actually occurs within a current trend. Typically, when we see this kind of a breakout, the breakouts themselves tend to be a nice sizable breakout, because remember, when we talk about a basic pennant formation, not so much the R.N. Elliott's triangle, but the theory behind it is as this market goes and it makes these series of higher lows and lower highs, you're building an energy. And at the point in which that market breaks or reaches the apex, you have the release of energy, and the release of energy causes that market to really move forward in the current direction of the trend. The ultimate trend, of course, in this market is up. So that is really what I'm looking at. Obviously, we're in at 1488. We have our stop in place. The market's trading above that. I would like to see it move back above 1500 because I believe on a psychological level that's a support area that I want to see. But the market's going to do what the market wants to do. We're simply going to be along for the ride and at best be able to predict it adequately. This has been Gary Wagner wishing you as always good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange